Hey traders, welcome back to another Sunday video where we go over market setups for the week ahead. In this video, we will be taking a look at price action, we'll be looking at fundamentals, and we'll be looking, of course, that COT data, which just came out very, very interesting. So stay tuned as we get in, and I do want to just invite you to hit that thumbs up button on the video as we get started. And on my video yesterday, I actually promised to talk a little bit about my oil trade, and I forgot to do so. So I wanted to follow back really quick and just show you guys my current position. I am floating around 120 bucks. It really hasn't moved too much from my initial entry, but I am long oil, and this could be a really interesting trade to continue watching forward. I shared this one inside of the group last week. So on the fundamental analysis side of things, we do have some interesting news coming this week. You have PMI numbers coming out big time for the US, for much of Europe, as well as the UK. So should be really interesting this week in terms of PMIs. You also, of course, have on Friday one of the bigger ones, which is the core PCE price index number. This is the Fed's preferred measurement of inflation, which will be very, very important. We also have GDP numbers on Thursday. On the top setups page, I want to draw you guys' attention to something that I am noticing going on in the markets. Economic data out of the US has been really, really strong and beautifully, like a perfectly built automobile. This engine fires right up and shows us on the Edge Finder that the US dollar is getting some bullish reads because of that strong economic data. One area that I'll point to is, of course, the economy tab, which shows us, this tracks things like retail sales. It tracks GDP numbers, PMI numbers, which are showing bullishness for the US dollar right now. And of course, if you're crossing the dollar as the quote currency instead of the base one, right? You have -2 in this column, basically saying when compared to the Kiwi and the Australian dollar that the US economic numbers look strong. So just so you understand the way this top setups algorithm is working, it's looking at all the market data that's coming in and automatically interpreting generally whether it is bullish or bearish. Very cool feature of the Edge Finder, and I just like to educate people on how this scoring works as often as I can. But we are getting slightly bullish leans for some of the US dollar pairs. Speaking of the US dollar, here is the daily chart. We're taking a look at a market that is was in a very strong downtrend and seems to have broken out. If you've been watching my videos recently, you know that I have pivoted a little bit on being just outright bearish on the dollar into being short term, at least for now, bullish on the dollar. We've seen some really strong economic data. Last week, we saw consumer sentiment, which showed consumers look relatively optimistic, the highest since I think it was like July 2021. So we see consumers optimistic about the economy, and that is actually very strong for the dollar. So despite this kind of wavering price action here, I'll be watching either for a pullback this week as a possible entry opportunity or a breakout on the lower time frames and a move up to this 104 level. I think that it is reasonable to think that we could see a push up into that zone as price again has been moving with some pretty good momentum. We saw a little slowdown on Thursday and Friday, but we'll watch price action to see where it goes from there. But from there, I'll have to reevaluate. And again, we'll have that PCE number coming this Friday, which will be very, very interesting to see how inflation is holding up in the eyes of the Federal Reserve. The PCE number is what they prefer to use to check inflation. So we get that number this week. So stay tuned on that. I will be live streaming that event, and I'm probably most interested in that event here this upcoming week. And gold is a bit of a tricky one right now. What you can see here is that we're pretty choppy on the daily chart. What I'd be looking for personally this week would be if you get something that's really hot for the dollar, perhaps PC numbers are actually hotter than expected, is a possible break through the lows. In that case, we could probably go back and retest this low point here. That low point, let me actually line it up for us. That's about 1980 on the price of gold. If we do get bearish, I think that's a pretty reasonable place to see prices go, but we will have to see because gold's been an interesting one recently. I think I prefer in the short term the bear case, but longer term I am still a bull. Let me kind of add some context to that. When it comes to the gold price action standpoint, you have this kind of this trend that you can't really ignore. You've had weakness continue to come into this market, and it looks like it's been wanting to trend lower for some time now. From a price action standpoint, we did try to make a new low, and I actually tried to sell on the retest of this, and as you can see, it went terribly wrong. Fortunately, I took a really small position on this one, so it was a small loss on the account. But I am looking for price action to either go bearish, or if it does decide to break out, I'll change my context a little bit on gold. But for now, it does seem like this could roll over, and if it does break the lows, I'll take that as a very bearish signal to potentially try to sell the retest again. So why fundamentally is gold potentially bearish? Well, if you have been watching, all the economic data, then what it tells you is that, hey, U.S. economic data is really strong, and that pushes back the chances of seeing a rate cut in March. So traders are thinking, and this is very, very important for gold traders, rate cuts, they are what is going to drive gold higher, at least in my opinion. If you see a rate cut in March, and it could happen, it will probably send gold breaking out. Now, that is because markets will say, hey, rate cuts mean a weaker dollar, and it drives the price of gold up in that reference, right? The dollar weakens on that idea, gold strengthens. Well, if that idea gets washed away, and that seems to be the case right now, well, not necessarily the case, but it seems to be an increasing possibility that we do not get rate cuts in March, as the economic data is still showing that the economy is strong and we may not be ready for that rate cut yet. If that is the case, it sends gold into this period where now we lost all that kind of momentum, and we could just kind of trade sideways or even lower for some time. Again, the rate cut story is very important to gold traders. Keep a very close eye on that, as it's all about the dollar. Rate cuts, the Fed, what are they doing? What are they easing? What are they tightening? It's all about that for gold traders. So price action's a little wonky, as traders are trying to figure out for themselves whether or not that rate cut or rate hold is going to occur in the March meeting. That is kind of what the debate grounds are all about for gold. And despite the increased probability that we do not see a rate cut in March, it was like 50-50, I think, the last time I checked on the FedWatch tool. The NASDAQ just ripped higher on Friday. And I've been transparent about this. I felt a little FOMO with this one because I'm really, really bullish on these things, but missed this move. And, I think the way to react to that is just to say, hey, you know what, I'll catch the next one, because you're not going to catch every move in the markets as a trader. It's just unlikely, and it's just impossible. So this move, though, has a really beautiful possible pullback opportunity at the 50%, which is retesting the highs. Now, you might say, well, Nick, didn't you just say you don't think rate cuts are coming? Well, you have to remember that a rate cut, so if rate cut probabilities went down, why did the NASDAQ rip? Well, part of it is because the economy is strong. Retail sales numbers are good. This good data is not necessarily just outright bad for stocks. Sure, rate cuts would be nice, but what the market is saying is these quality names, these big tech names that are super scalable and not actually super hurt by interest rates, they led the market. That's why the NASDAQ was up 2%, and the S&P was up 1.24%, and the Dow was up just over 1%. Still really good days for all three indices. However, the NASDAQ led by double the Dow because they're the big tech names that will do really well, despite if interest rates kind of stay at these current levels. The market is excited that the Fed's just not going to raise rates anymore. If they hold them, okay, we could still make money. If you cut them, oh my gosh, we're going way higher, right? So the stock market just continues to look bullish to me. I am looking for pullback opportunities, however, and I don't want to get caught up chasing the hype. So I'll look for pullbacks. I'll be calculated with the NASDAQ. Same thing with the S&P 500. You've got a beautiful level here that I will be looking at close as we come into this week. If we get the pullback, wonderful. If we don't, I'm going to be in a little bit of pain, but I'll accept the pain that comes with being a trader. If you don't know what I mean, then you haven't been trading long enough, right? FOMO is a real pain. It really is not fun. No matter how long you've been trading, that struggle doesn't go anywhere. However, what you do learn is you learn not to make dumb chasing decisions, because if I go out and I buy these things, there's got to be some hidden law in the nature of markets where if you buy the top, it immediately crashes, right? not actually, but again, I'm looking for a pullback. I'm trying to stay disciplined and looking for my opportunity to join these moves on the indices. And just to cope a little bit, I am about 50% full transparency, about 50 to 60% in the market on my portfolio. Now, if you don't know what I mean by that, I use a stock portfolio. So about 60% of my money is actually in the market right now via some of the trades that I took on XLK, XLE. I sold puts on these, so I am still making money off of these moves. But of course, at this point, I'd rather just be long SLK, which was up 2.3%. This is the technology ETF. And if you don't know how to trade ETFs, or you would like to start trading ETFs, if you're in the US, make the switch, man. It is way better than trying to trade on FX brokers. If you're a US person and you're trading on unregulated brokerages, make the switch, man. WeBull is what I use. There's a link down below in the description. If you use that link, you'll get a bunch of free shares when you sign up, and so will I. You'll be supporting my channel, and I will very much appreciate it. Okay, guys, now the time we've all been waiting for. Let's talk a little bit about the COT data. And the COT data came out really interesting this week. We can see net positioning. We still see gold as the top position. The South African Rand, what is going on there? You got the Nikkei, you've got the Dow creeping up to number 4 here. Really interesting to see that Dow up there. Next on is the NASDAQ for the indices. You got silver, oil, euro, pound, USD sitting solidly still in the middle. And SPX is actually the laggard of the group in terms of COT net positioning. So let's have a look now at the actual latest filing data. And this is fascinating, guys. We saw a really overall bearish week, like most things got sold. So we're actually going to start with the bottom, South African Rand, Platinum, but US 30 actually got sold in the latest filing. This is really interesting to me. And it makes me wonder, now that we see the Dow, we see the S&P 500, and we see, well, the NASDAQ was very slightly negative. Between these three, the big 3 indices, they all got sold. It makes me wonder if perhaps there was some profit taking last week, and maybe that pullback will come sooner than I'm thinking. We'll watch and see very closely. On the metal side of things, you had gold slightly sold, silver slightly more sold, and in terms of the US dollar, where is the US dollar? There it is. US dollar slightly sold as well. So everything seemed to have gotten sold, but really interestingly, look at this pound transition. We saw them add a change of 5,546 contracts on the futures market. By the way, the COT data comes from the futures market, people trading these individual contracts. And these, of course, are institutional money moving in and out of positions. But I track this every week. I find it incredibly useful to keep an eye on. And yeah, you've got all sorts of key stats, key figures here to keep close eye on. But you've got the pound, the Swiss, the yen. These are your positive territory ones. Same thing with Bitcoin, and everything else got sold to a varying degree. But again, US 30, the Australian dollar, the S&P, the Canadian dollar, these ones got sold the hardest. But I find this to be a very interesting COT data. And you guys will have to let me know what your thoughts are down below in the comments. What do you think this is all about? Why is there so much net selling week over week for the COT data? Find it very fascinating and worth at least mentioning to you guys here on today's video. I also want to go to the smart money indicator and show you guys gold. I thought this was interesting. This is smart money versus retail sentiment. You know, on the Edge Finder with our data, we track both. We track the retail side of things, their sentiment, versus smart money. And of course, we call smart money COT. Same thing. We just call it smart money. It's our fun little marketing term. But with this said, we can see that gold, a little bit of rally towards the end of last week, but overall has been kind of trending lower. What I find interesting is that COT data still slightly positive, and overall continues to be very bullish on the gold market. And look at retail. Retail's about, neutral, it seems, but it had been very bearish, ticked up a little bit recently, but I find this to be very interesting as it started to rally. Retail traders got a little bit more on the sell side. So this has me a little bit cautious again with trying to get overly bearish on gold when I see the COT data is very strong. So big money seems to be still very invested, very bullish on gold, and retail traders are kind of flat. So let me know what you guys think about this one as well. This indicator, if you do not already have if you do have the Edge Finder, you have the Smart Money indicator as well. Just head over to this tab here. You can play around with this and select any different chart you'd like and get a closer look at what big money versus small money is doing. And I should mention, if you guys want access to the Edge Finder, I got a huge discount for you. If you use the link down below in the description, use code YTVIP. You get 10% off the product. You can use it for as long as you want. Here's the cool thing about it. We don't charge monthly fees. It's a one-time fee to get our software. And then you can play around with all of these different indicators, our bank forecasts from research teams around the world. You have, of course, all different sort of sentiment tools, a put call ratio, sentiment, retail sentiment, COT data, smart money, and our top setups algorithm. You get all of this for unlimited amounts of time. There's no cap on how long you can use it, and you can access this from the cloud anywhere, on your phone, on your desktop, whatever you'd like to do. So if you do not already have access to the tool, again, take advantage. Use the code and promo code link down below in the description. Get yourself a copy before the trading week starts. And again, we appreciate your support on using the tool if you do use it. Again, a lot of people go into designing and building the tool each and every day. There's about 10 of us at A1. So thank you very much for your support. Now a quick look at some of the currency pairs. You can see Euro USD. I thought this was interesting. It's sitting right at resistance. I'll watch this one out of the gate to see if that dollar does have any strength. It could push this thing right back down to the lows. So watch the Euro close. We're kind of in this bearish breakout, now retesting the upper limits of this price action zone. Pound USD, kind of a choppy chart, not really one that I'm really looking to trade on the daily chart. If you do get a break of this consolidation zone either direction, it could have a little bit of momentum, meaning if it breaks here, could see a sell from there, or from here, a break above could be kind of a bullish signal in the short term. So definitely one to watch there. UJ also still continues to chug higher. Watch this one. If it does pull back, I think, to be honest, that short term, the dollar still looks strong. And so that could actually be an opportunity, in my view, for a short term pullback continuation move on the dollar yen. We also have USD CAD, which sold off there on Friday. So kind of an interesting one, not particularly my favorite chart, as I am kind of bullish oil. So I don't necessarily want to go bearish CAD, right? If I buy dollar, sell CAD, I'm not really happy because I'm sort of bullish oil, and I don't want to sell dollar buy CAD because I'm also kind of bullish dollar. So one that I personally will avoid, and I hope that process, right? If you're bullish on both currencies, that to me just says move on to a different currency cross if you're trading currencies. The Australian dollar, still very bearish looking. If price pulls back up into this area like the 0.666, which is, a creepy number, but if it does pull back into that range, that could be interesting to watch. And the Kiwi dollar, same general idea. Move up to 0.62 could be interesting, but it's a ways away. So just watching these currency pairs from a distance. And finally, guys, I want to show you yields. This is kind of an interesting thing going on here. Yields continue to push up. So again, despite yields poking back up, higher yields mean that, economic data, well, there's a couple different ways to interpret this, but the way I interpret it is that we saw economic data, which was strong, consumer sentiment, etc., retail sales, lots of hot numbers, and that drove the number here a little higher. Why? Because the market participants are thinking inflation could stay more sticky than people are thinking due to all those hot economic reads. And so continue to watch this, because if that does really creep higher, it actually could drag the market down off of fears of, really pushing back those rate cuts. So market wants to see rate cuts, but they are not super seemingly insistent on them happening right now in March. So we'll continue to watch that really close from there. And as we finish the video, guys, I just want to ask you, if you did make it to the very end of the video, first of all, I very much appreciate you spending all this time with me. And if you did make it to the end of the video, type the word yields in the chat. I will try and heart your comment. The reason I do this is because those of you guys who make it through, an 18-minute video, 19-minute video, I see you. I recognize that you're working hard just to learn this stuff too. And, I appreciate you watching my videos, supporting my work. And if it is helpful to you, drop the word yields down below in the comment section. And the final thing I will say is, remember that if you're not already in our Telegram channel, we do have a free Telegram where we do basically visual versions of my videos where you can get charts from me and Frank. We post content all the time. It's totally free to join. The link is down below in the description. Thank you guys very much for watching. Have a great week ahead.